The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. The first chart that we have here is not a chart. It's a picture of our neighbor. We had a little Gila monster. He's not so little. He's about 2 feet long, and he's a very beautiful creature. Boy, he really moves slow. You wouldn't believe how long it takes him to get across the street. But anyway, I just thought I'd bring this up, and we'll see. This is the kind of thing that we have in Arizona. I've lived here 21 years. It's the first one I've ever seen. I've only seen 2 rattlesnakes in well, actually, I've seen 3. One dead one on the road, and then 2 of them I had in the front room of my house that got in. When one of my buddies was staying with me, left the front door open, and 2 of them came in during breeding season. So that was another one that was a little scary. We had to get the fire department into. They actually have a snake patrol here that does that. Now I wanted to share with you. And this is important, I believe, because we're dealing with a situation in the grain market where I believe we're looking very close to what happened in 1988 when we had a tremendous drought going on, and then after that we had a situation where we had a pretty good rains afterwards. Now, yesterday, you remember I showed you the picture of the Shasta Lake up in Northern California and how it had filled up. And I have to show you this picture because our good friend Brent from Martinez, California, right in that area, was able to send this on to me to show you what it looks like. You're going to see what the drought was in 2014 and what it's done when the rainy season hit this year. It's filled up the lake. In fact, Brent called me yesterday to tell me that water line on Lake Shasta that we had seen yesterday has already been filled up. So we've lined that up, very, very nicely. So that's going to be real interesting. Now we got an important planning intentions report, I believe, coming up on Thursday, and they'll be planning fence post to fence post this year would be my guess, and we'll see what's happening. But this is the lake. You'll see Mount Shasta in the background up there, and then you'll notice that water line, that brown line around the lake, is all filled now. It's got all the way up to the tree line, which is telling you that pretty much it's over. This is what happened in 1988, and it's going to be interesting if we come up with the same type of thing. Now, at the half hour, we're going to have Bill Meridian from Cycles Research out of Vienna, Austria, as our guest, and he'll be showing us some charts that he's looking at. You'll recall Bill warned us of what was going to happen into July and August with his panic cycle, and so we'll try to get some other information from me as we go through this and as we go through the show today, and take a look at it. One of the things we want to talk about today that I think is we should talk about the things that we know, and that is the things that are working pretty good. We've had a really nice run in the gold market. We came off of that bottom down at the 1206 level, and we've had a pretty significant rally off of that bottom. We thought it was going to get up around the $1,235 area. We actually got to $1,245 last night, and now we've started to back off just a little bit, and we should be looking for a $17 pullback in gold. Because gold is really, really strong, it's not going to react more than $17. That's the harmonic number in gold, 17 and 34. And so that's what I would be watching, would be for a $17 retracement. That would take us to 1228, and that would be right down at the level where we broke out of previously. So we'll see if that's going. That was well, actually, the Fed breakout was around 12.25, and then the market rallied another $20 from that level. But the Fed makes a huge impact on these markets, as you can see. And what's so exciting here is the fact that once the Fed gets in there's virtually no downticks in the E-mini S&P. It just literally, makes a straight up move that is, really, it's really amazing, how much it runs when it really starts to go. So we'll watch that very closely. Now, the currencies had an interesting move yesterday. In fact, all of them did. And we want to watch, how something's going. I want to give you an example of this this pattern that we look at all the time, which is the ABCD pattern and the 382 retracement, and the importance of some of these numbers. This was the market yesterday, long before the Fed was doing anything. This was the Canadian dollar. As you can see, we had a pretty good run up. Then we had a really nice pullback to the 382 retracement. The market rallied all the way up to the 130. 240, 132.25, 132.40 area, rallied, 70 pips, which is $700, which is equivalent to 15 cents in beans. So this is a pretty big move. And then it reversed and went all the way down to the 130 level where it's trading at right now. That was after the Fed came in. So when these levels fail, they act as some type of a magnet to take you to the next level. That's why, we were watching gold so closely. Now, someone's asked me a question: does gold still have the chance to make that 1190 level that we've talked about? And the answer is yes, because all we did with that big rally was just to complete another swing up from the 1276. If you remember, we had a high at 1286 in gold, and we had another high at 1276. We had another high at 1262. I believe that was on the 18th, and so that's all it's doing is it's bouncing against these downtrending lines. So we still have a chance. It's a long chance from right now, but I still think you've got to keep an eye and an open mind that gold could make 1190. If it gets to that level, then we have a really, really long, really incredible setup. It'll match up with a lot of things that have happened in the past, and we'll have something to look at. Now, silver held up pretty well too. The problem is when silver rallied, it didn't do very much. It rallied 40 cents, which is quite a bit, but it hasn't really, kicked in to be the leader. And this has the possibility of doing that, but right now it certainly does not have that property going for it right now. So we'll watch both gold and silver. There's still got someone said the Fed is an elephant. It's not an elephant, it's a herd of elephants. And not only that, the elephants are leading the parade because everybody listens to what they say and they take it as gospel. That doesn't necessarily mean that they're going to be right. If you remember, we were watching Treasury bonds, very, very closely yesterday, up around that 164. 22 area, and the high was 164.24, and they've already backed off a little more than a point, from that level. So that one's working pretty nicely because we got down to the 160 through 12 today. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted the chart into Tiger TV for RIG, which is one of these oil rigging ETFs. And as you can see, we had a 3-drive to a bottom pattern. The first drive was 127 of the first low. The third drive was 1.618 of the second drive. So it was perfectly geometrically set up right. And then we had about a 60% move in the stock, and now it's moved back below the 786. So that should have some support here. But anything below 7 on this would make it, very, very suspect. We also have had a chart that I posted of the gold when we were watching this bottom down around the 1212, the 1206 level. You'll see that we got up to 1245. Now, if this is truly the bottom, we're not going to make 1190, because if we measure this ABCD move from the high we had way back there, 1262, that's going to take us all the way down to about 1170, which would be lower than I would like. And what I like and what the market likes can be far, far apart. So we'll be watching it as we go through, but we'll see if we get much above the 1250 level, folks. This thing could really take off, and we'll see what happens. As you know, I've always recommended anytime silver is anywhere near $15 an ounce, I recommend buying the silver rounds. These are the $1 silver dollars that the mint still print, the U.S. Mint still prints, and you'll be able to keep those. They're beautiful coins, and I think they'll have value, down the road. Whether we're going to have massive inflation or not, remains to be seen. As far as the grain markets, someone's asked a question about the grains, and that is we are completing an ABCD pattern, which is a Gartley pattern, a bearish Gartley pattern in the grains, about 5 cents higher in the November soybeans, and we have a report due Thursday, I believe. So that'll be something to watch closely. But November beans are the new crop beans. May and July are the old crop beans, and they're acting very nicely also. But we'll see what's going to happen. We're at a high level on a historical basis in beans because for many years they never got much above $6, and after we hit that $18 level several years ago, this level here, half price at $9, makes them look relatively attractive, from just an inflation standpoint. But we'll follow that as we go through. We've had a nice rally in wheat and also a rally in corn. And longer term, I like those, but we'll be able to see. We got a caller. Hi, we got one of our friends on the line calling long distance from Singapore. William, are you there?
Yes, I'm here.
How are you, my friend?
Oh, pretty good. Yes.
Okay.
Actually, I was thinking, I know you have a guest later on, so...
No, we have plenty of time. So don't worry.
Oh, okay. I'm thinking to ask you, the stock Tesla. What is
Sure.
your view on this particular stock?
Okay, I posted the chart of Tesla in the Tiger Room, and you'll be able to see that after we made that high up at 12 at 2. I got gold on my mind. I'm sorry, William. We had a high of 290 in Tesla way back in July. Then we dropped in half to 142. And now we've had a rally. And if you'll notice, this rally is exactly equal to the rally that we had from March through July. And it's coming in at a 61% retracement of the high that we made, way back in July. So my assumption is that we're into some pretty stiff resistance here in Tesla around this 230 to 240 levels, what it looks like to me.
Okay. I have the same, thought that, probably we may face a resistance here. But I was curious because the other day, I think last week I heard that, from CNBC that some, traders, they bought massive, options on Tesla. On the long side. So I was wondering whether am I wrong in my view on this Tesla?
Well, what CFNN reports and what the traders do can be far apart. So you got to be careful listening to what they have to say. Remember, look at the chart. If prices are going up, there's more buyers. If prices are going down, there's more sellers.
Right.
So if we get above 245, this thing could easily run up to 260 or even make new highs. There's also that possibility. With the emotionalism of the Federal Reserve, anything could happen. So, make sure if you're in these puts that if they get above that 246 to, say 250, you're certainly going to be wrong. But right now, it's sitting right at the 61% retracement of that whole move down.
All right. Could I ask you one more question?
Sure, fire away.
Yeah. Okay. Regarding the goals you mentioned, we still have the possibility of, going down to 1190, right? And I'm just thinking, what will negate this move going down to 1190? Meaning.
Well, the first thing would be that we get above, the 1255 level. That would be more than a 78% retracement of that last high we had at 1262.
Sure.
But frankly, what I'm watching, William, is what the pullback is going to be because, we had a nice run of about, the low was at 06 and we had a high of 45. So we rallied $39 an ounce.
Yes.
And so I want to see what that first retracement's going to be, which would take us to around 1225 to see how it does that. But if it gets below 1225, that means we've still got another chance to go down and to test it one more time. So we'll have to do it day by day, basically, is what I'm looking at.
Sure. So it's between 1125 and maybe the other side is 1155 to negate the down move.
That's
right.
correct. That's absolutely correct.
Unless it's going down, below 1125, then very likely that we will see 1190.
That's correct, and we'll be watching that on a daily basis because it's that important, in my opinion.
Sure. Okay, I got it. Thank you very much, Mr. Pesavento.
Thank you for calling in.
Thank
And
you.
Sarah says to say hello to you and have some Durin for her today, okay?
Oh, sure. I'm waiting for her to come. I'll get ready, the durians for her.
Okay,
I'm sure
thank you.
get a very good quality durians for her.
All right, thank you so
Okay.
much, William.
Thank you. Thank you.
You bet. We're going to have Bill Meridian on here in a few minutes, about 5 more minutes after we get to the break. But we'll see what's going on. Let's go to the stock market here a little bit, because the whole thing for me boils down to this New York Stock Exchange Index that's most probably going to take out the highs at 102.46, because we're only about 50 or 60 points away from that. But we've had these lower tops through here. If we break above that 78% retracement, that would exceed the last rally that we have. And I frankly don't know. Well, you can see what the Fed does. I mean, no one wants to stand in front of it, so there's just nothing but consistent buying. Now, whether that's going to be through the rest of the day or not, I don't know. But that basically, if we get above those highs of March the 23rd, when we had the lunar eclipse and full moon, that tells us that the Bradley model is flat out wrong, and you don't know where it's going to go, so you just got to stand in sign. So today is a real critical day. 877-927-6648. Stay tuned for Bill Meridian.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Bill Meridian on from Vienna, Austria. And Bill, I've posted the first chart in, but the question that that two people have asked is, what is your lifestyle like over there? I know you lived in Abu Dhabi for a while, but how is it in Austria? What do you do? Like, how do you set your work schedule? Can you give us a little bit idea what your day's like?
Yeah, it's pretty pleasant. We're 10 minutes outside of the city center, so we have a garden in the front, a garden in the back. We have fruit trees, and it's a 10-minute train ride to the city center, and I go to the Cafe Central where they have Mr. Bill's table. I have a reserved table at the cafe, and they have live piano music, and I take my laptop with me, and I work there very frequently, and I also go to the university where I take courses in quantitative analysis because I have the professors there. One of them has been asked by the World Bank to predict euro prices, and we sit and go over his analytical work, and I show him what I'm doing. And so if you're into intellectual things, and if you need good programmers, they're very available here at a low, well, the prices are going up, but they're very good. They graduate very good students. They're very knowledgeable. And the quality of all that type of work here is very high, which is the reverse of Abu Dhabi. But in Abu Dhabi, it's sunny and the food is great. And so here it's very culturally very rich, but not nearly as physically beautiful as Abu Dhabi. And I do spend about a month of the year. And I just came back from Algeria. I also go to Abu Dhabi, and I get out of here from time to time. But winter and summer are great here.
What about the cost of living in Vienna, Bill?
It's weird. It's if you look at these indices that they provide, if New York City is 100, the rental index here is about 70 to 80. But the cost of appliances is around 120 to 130.
Well, fortunately, you don't have to buy appliances every week.
I buy all my computers in the States and put them in my suitcase and bring them back with me. And they try and keep the rental prices low here, and you're encumbered by a ton of rules and restrictions, which is why not a lot of new housing gets built.
Okay. All right. Well, let's go on to the first chart that you have here, which is a combination of the 1, 4, and 10-year cycles. I'll just let you keep on talking because everybody wants to hear what you have to say. So fire away, buddy.
Well, let me just briefly explain. I sat my last 3 years in Abu Dhabi. I listened to fund managers come in and they say, we don't try to time the market. There's no way to do that. Nobody can do it successfully. And I always answered to them, I said, if you do absolutely nothing, just add the 1, 4, and 10-year cycles together and project them out. The 1-year cycle is the seasonal cycle. The market, bottoms in October, and, it rallies, and, it's usually corrective in June. It rallies in the summer. It's weak in the fall. The 4-year cycle is called the election year cycle. But as Ian Notley liked to point out, the common knowledge was that the Federal Reserve juices the economy up, but he says the 4-year cycle in which the market is usually strongest in the year prior to the election, it is second strongest in the year of the election, and the weakest in the year after the election. Ian pointed out that was true before the Federal Reserve was established in 1913, and it's true in countries where they have 4-year election cycle, 6-year election cycle, an 8-year election cycle, or no elections whatsoever. In other words, there's a 4-year cycle, period. And the 10-year cycle is that of Edgar, it was Ameritrust Bank. I forget the chap's name now. But he developed a 10-year cycle. And that points out that most lows occur in years ending in 2. Every year ending in 7 has had a major correction. Years ending in 0 have the worst returns. So there you see the 1, 4, and the 10-year cycles projected out in 2016. And now, as a precond, I looked at the combinations that worked and the combinations that did not work, and developed we want to call it a technical trigger or confirmation. And that is, if the market is strong from November through January, which is when most of the big institutions take their positions, because that's what we did, you've decided what you're going to do, and you've bought all your stocks by the time the end of January rolls around. And then you don't sell them right away because you can't in a big institution. So last year, that period, November to January, was negative, but this cycle pointed up. So I felt the resolution of the two would be a flat market, and I think, what was the S&P, down 70 basis points for the year? In fact, one guy renewed my monthly retail letter because he said, you were the only guy who said it was going to be flat, and that was right. And so this year, we again have a negative signal from November to January, but it is the greatest magnitude drop since 1950 when the institutions started exerting all their influence over the market. Prior to 1950, this did not work. And so now we have the precondition being negative, and we have the cycle. You can see it yourself. It goes down until late June. So from this, by the way, January in election years is one of the weakest months of the year, so I concluded January will be down. And because January was down, it triggered this November to January precondition signal. So I got that right back in December. So my opinion is the market is down for the year. But as you can see, it projected a low in around the last week in February, but the low was around mid-February. And now we're running up, and you'll see a little peak there. That is around, I think, April 18th. If you go to chart number 2, you can see the cycles for Q1 only, which is a little easier to see. And you see we're running up now, so I am long right here because we're in that little run-up from late February up until March 20th, 18th, and we did get a flat market after that. And now we are turning up, and April 1st is right around the corner. And if you look down to graph number 3, which is the second quarter of this year, you'll notice a peak up around the 18th, the 15th to 20th in that period of April. So right now, I am long, but when I'm clearing out all the long positions, April 15th is a Friday. Many turning points are Fridays. It is also the end of option expiration. Option expiration week has an upward bias, as many people know. And it ends on the 15th of April. And then you can see that that graph essentially goes down until you get to late June. And so now let me cut back to this precondition that I mentioned. So I then took the years which were preceded by a decline at the beginning of the year and said, what was their internal structure for the next year? Well, first of all, if that period is down, you've got about a 75% chance of a bear market year. So it is down, and this cycle confirms it. So I'd have to say it's north. The odds of a lower market are north of 75%. And in those years that met these preconditions, June was the worst month. In fact, the years that have met this precondition, June has been down for the last 12 consecutive times that these preconditions have been fulfilled, and September has been down 11 out of 12 times. And the sell in May period, which I'm sure everybody out there is familiar with, which is where the market usually sells off from the first week in May to the last week in October, is especially pronounced in these bear market years, and that's where most of the decline occurs. So given all of those back tests, as we get closer and closer to April 15th, I think the bulls are on thinner and thinner ice. So my plan is to clear out my positions. I use the SSO a lot, and if the technicals warrant it, I'll be cleaned out, and I'll have the inverse S&P position by the 15th of April.
Bill, we're taking a break here.
Yeah.
Could you stay with us, please?
Of course.
Thank you.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Bill Meridian of Cycles Research in Vienna, Austria, and Bill is telling us that we have a negative bias in stocks for June and September with a very high probability. And the next one you wanted to talk to us, Bill, was the oil market?
Yeah, well, just let me finish up. But the way I'm planning to handle this is I'm holding on to the SSO, which is the double long S&P 500 ETF. And that's my major, that and the SDS. And what I'm planning to do is, and if the market continues up and I get no major sell signals, I'm just going to continue holding that until the close on April 15th. And then I'm going to sell all of that out and buy the SDS. And then using trend following techniques with a stop overhead that trails down, I expect to stay in the SDS for April, probably May, and probably until late June before we see a rally. And the damage will probably all be done. The average decline for the markets that met the bear market profile year is like 10-11% by late. I think it's going to be probably September. October usually closes on the upside, but the best quarter of the year will be the fourth quarter. But between here and there, these buy and hold long only funds are going to get beaten up. So to go down to oil, what you see here is from my software, which extracts cycles from data, and that is the longer term cycle. And as you can see, it bottomed it gave a buy signal just before I think it was about 2 to 3 weeks earlier than the market actually bottomed, and it runs up here. We get a sell signal, we got it last week, and we're getting a buy signal May 1st. And let me just state that I always start with the annual cycle of the year. The strongest month of the year, if memory serves me correctly, is March, and I think August is 2nd and April is 3rd. If oil ever closes August on the downside, go short, because the distribution of following lows is this, that there's been only one low prior to December, that most of the lows are in December and January if August closes on the downside. So in other words, some other cycle is overriding the usual annual cycle of the year. And so Q1, this cycle turned up, and what do we know? We know that the period January through April is one of the strongest times to hold oil. So in this case, this cycle you're looking at is dynamic. It is extracted from the most recent data. The other cycles are static in that they change only very gradually over the years. And besides that, I've got the best sentiment indicator I could have. In 1999 in Abu Dhabi, I said I think oil is going to go up It's like 70, 80, maybe $100 a barrel. And the son of the Minister of the Interior said, Bill, if that ever happened, they'd put intense pressure on us. If oil goes above 35, we'd have to start pumping. I said, you're not going to be able to pump enough. And they were cutting expenses left and right. And of course, oil went to, what, 145 a barrel? Well, I just spent, I called people. I was just over in Algiers with Abu Dhabi people, and I just called Abu Dhabi yesterday, and this Englishman says, Bill, the bank is cutting back here, they're cutting back there. Now that the oil price decline has occurred, now they're cutting their expenses and laying people off. They're the perfect contrary indicator. And that's what they're doing right now. So I feel oil is going up to $50, $65 a barrel. And to just jump down to gold, the cycles have not been, gold has been behaving very atypically. Most gold highs have occurred in the month of December. Where was the last gold low? It was in December. That's very unusual. And so last year, my models didn't work very well. I think they're back on track here, and we've got a low that, that's just a couple of days ago, isn't it? Well, 1 day ago. So right now, I think gold should start rallying again. And just remember, when you get to the period June through November is the strongest annual period to hold gold. And we're not there yet, and it's been rallying. And my Elliott Wave friends like Walter Murphy and Tony Plummer, they say that they feel that Elliott Wave pattern to the downside is a completed bear market. And I would have to agree with them. They say that for oil, they say that for gold. Mm-hmm. And the reason, of course, is, as I keep telling everyone, many years ago, QE is ending, so won't that send all the stocks down? I said, it's like weeds. It'll come from somewhere else. And then you had QE in the Eurozone, QE in Japan, QE in China, then China cut the reserve rate. I said, look, this is almost all of these price movements are now created by excessive credit inflation, and these guys don't know. They're steeped in Keynesian economics, and national debts are huge, and they can't let deflation take hold. So that's always the response. So you're just essentially waiting for the next blast of credit to come through. And it's finally filtered through, and it's lifting all assets. And as Ian Notley used to warn, if everything goes up together, then everything will come down together. So that is the way gold and oil look.
Well, listen, you were spot on the oil market when we had you on several months ago. You said it would get down just a little below 30 and then have a pretty good rally, and we rallied well over 25% in just a very short period of time. So you think we still have a chance for $50 to $60 per barrel oil in the future?
Yeah, based on the sentiment and based on the cycles, I would have to say so.
Okay, that's good. Well, listen, I want to thank you for being on, and we'll have you on again in another a couple of months because we enjoy hearing about your lifestyle and everything that's going on. And Bill, if you ever see something that you really want to chat about, just Skype me and let me know. We can have you on the show in a matter of a day or so, because the folks really like to.
Yeah.
And how do they? Hey, how do the folks reach you if they want to contact you?
An email to bill@cyclesresearch.com. That's Cycles, CYCLES research.com.
Okay, good. When are you coming back to the States?
That's a good question. I'm supposed to lecture at Stevens Institute of Technology on April 26th, and I don't think I'm going to be able to make it. I have my courses here at the university, and I'm supposed to fly to Abu Dhabi. And waiting for Arabs to make decisions is sort of like spinning a roulette wheel. You never know when you have to go someplace or wind up someplace.
Well,
and I just don't know. I may be going. I'll definitely be there in June, July at the latest. And by the way, good. Can I say a quick word?
Sure, please.
Donald Trump?
Yeah, go ahead. Wait, did someone ask about what about the election?
I haven't tried to pick a winner yet, but let me just say, Larry, that business activity index graph I sent to you with the projection?
Sure. That
long fold-out thing. And I had said that the last period like this of 16 years of, it was 1966 to 82, 16 years. And everybody knows if you look at a long-term chart, you get these choppy sideways, which we call bear markets, periods, and then another rally. And my chart indicate that period in economic terms is going to end in 2017. And so people start picking away at questions. You have to make up fundamental reasons. I said, well, the Republicans will definitely win the midterm election. They did. I said, the price of oil is going to come down. It'll increase disposable income. It did. So what's left? I said, well, the election of a Reagan-like figure, and there was nobody like that on the scene until Donald Trump popped up. And so I haven't done work on the election, but just without any planets, I think Trump will probably get elected. And I can tell you right now that he is not the establishment's man. You can see the way the press has turned on him the minute he started building up momentum. And I have two things to say about that. My friend Robert used to write speeches for Pat Buchanan, and he also knew Governor Meacham of Arizona. And they both told him at the Republican National Convention, Gerald Ford and Henry Kissinger sat down with Reagan, and they said, you're going to take George Bush as your vice president. You have 60 seconds to make up your mind. Otherwise, we'll do to you what we did to Goldwater.
Wow.
And he took George Bush as the vice president.
Wow.
And then, as we all know, somebody took a shot at him.
Yeah.
And anyway, in August of 2017,
Bill, we got to take a break here. Stay with us. We'll finish up. Can you just give me a couple minutes here for commercial?
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're finishing up with Bill Meridian from Cycles Research, and we were talking about the election and Trump. And Bill, what is your prediction for the election for November?
Well, I haven't had a chance to do any planetary work. I'll do that 1 month from now if you want me to come back on and discuss it.
Absolutely.
But according to my long-term cycle, Trump should be elected. That's the economic cycle because it fits the economics. But then I noticed, number one, in 2017, there's a 54-year cycle. If you go back, it's the equivalent of 1963. So I predicted that Washington and Moscow relations would deteriorate because if you deducted 54 of 2014, you got 1960, which is the U-2 spy plane. I think it was 1961.
Start of the Cold War, yeah.
And then you had the plane shot down recently in 2004 over Georgia. Or was it the Ukraine? I forget.
I think it was Ukraine, but I'm not sure.
Anyway, if you go back 3 times 54, 162, you had the Crimean War, and Russia annexed the Crimea. So the 54-year cycle and its multiples work. And 54 years ago, you had protests on campus, and you're getting campuses to be active and militant again. If you deduct 54 of 2017, you get 1963, the year of the Kennedy assassination. So I'm thinking, wait a minute, if I think Trump is going to be elected, would he then be in danger? And then I thought of this story. I called my friend Robert, who used to write the speeches, and I said, well, what do you think? And he said, well, I don't think Trump is under anybody's control. Reagan wasn't either. He was too popular and the establishment could not stop him. And so the eclipse that occurs August 2017 is at 29 degrees Leo. First of all, it is conjunct the fixed star Regulus, which is one of the 4 royal stars of Persia. In 1979, when that occurred, the Shah fell from power. So it's a pretty potent area of the zodiac. Well, 29 Leo is his ascendant, which is conjunct Mars, which gives him this imperial, aggressive attitude where everybody thinks they're being shoved and pushed by him, and I guess he's fairly brusque. And so I sent an email to Marla Maples, wife number 2, and I said, can you confirm this is his time? And she said, yes, that is the time he was born. That's what we used when we erected his horoscope.
Wow.
And so I would have to say in August, he might slip on a banana peel if he's president. So.
Oh. Hey, Bill, thank you for joining us, buddy. We really appreciate it. Great show.
Always nice to talk to you, Larry. Bye-bye.
You bet, buddy. Thanks, everyone. We'll see you all tomorrow. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.